Hello, folks. It is Friday. It is June 21st. It's about 2 o'clock in the afternoon on the west coast of the United States, which, of course, that's where I'm located. In this video, I'm going to be focused on the precious metals. Let me share my screen and we'll get going. There it is, gold and silver. What else do I talk about? I talk about other stuff, but mostly I talk about the precious metals. And so anyway, gold's kind of consolidating, silver as well, just consolidating, a little bit of a pullback, kind of chopping sideways. If we pull back and look at the big picture, we see the consolidation, sideways, flag pattern, pennant, however you want to describe this formation. But in an even bigger picture, what I see here is that gold is stair-stepping higher. And we can see, clearly moved through and beyond 2000, consolidated, stair-stepped up to, 2150, a little bit of a consolidation. Next jump was up to 2300. And so that's where we're at currently. We're in this stair step between 2300 and 2450. Will we ever see 2000 again? I suspect not, but that's just me, and of course that's my bias. And if you would, if you think back to a year ago, only a year ago, and we were looking at gold at 2000 and thinking, is gold ever going to break above 2000? And so here we are, 12 months later. Not only has gold broken through 2000, but as I was saying, the likelihood of gold dropping back to 2000 is not high. That's not a bet that I would make if you asked me to place a bet. Wouldn't be betting on $2,000 gold anytime in the future. So let's see, weekly time frame, more of the same, stair stepping higher, clearly, have broken through, moved beyond that $2,000 level. Now we're up here in the $2,300, $2,400 range. A lot of times in a market, we see after a big move, we'd see a pullback. You'd see, so we'd be looking at let me make that a solid line so it's easier to see. We'd be looking at a big pullback like that, big high, big pullback. But that's not what we're getting in gold. This is a high consolidation. It's basically price has, spiked, moved fairly rapidly, impulsively up to a new level, and now is consolidating at that level. And so we can refer to it as a high consolidation, which is indicative of high energy or elevated energy. When energy is low or lower, because energy is always relative, price will pull back in a corrective movement. And we can see that here. There's a corrective movement, there's a corrective movement, there's a corrective movement. What we're seeing so far is a high consolidation. Energy is still high enough that price is able to consolidate at this high level and gather energy for its next move, and reasonable to assume that the next move will be to the upside. So anyway, let me stop rambling, keep going. This is quarterly time frame. So every price bar in this chart represents 3 months of action. Currently targeting in terms of Andrew's pitchfork analysis, the next median line, which in this case is the first median line extension of the Schiff pitchfork. And that would give us a target of 26 to 2,700. And one of the unique aspects of Andrews pitchforks is not only do you automatically get a price target based on the median lines of the forks, you also get to estimate a time frame. And so we look at, when might price reach that price target, and we can see, early 26 down here, April of 26, January, February. So, spring of 26, we're probably looking at $2,700 gold based on Andrew's analysis, Andrew's pitchfork analysis in the weekly time frame. No, in the quarterly time frame. Yeah. Now, 6 month, half year, every price bar is 6 months in time. Currently targeting $2,800 based on this cup and handle pattern. It's a beautiful pattern. I mean, what can you say? That pattern, if Picasso drew that pattern, we'd just stand back and we'd look at it and say, ooh, ah. So anyway, 2,800 currently targeting, and that's what I'm expecting, folks, is that we're going to see gold's going to be at 2,800 here pretty darn quickly, quite possibly in 24, although it'll probably be a spike up and a pullback. The forces that are able to will yet again try to slap gold back down. And they'll have some level of success, as they typically do. So anyway, let's move on to silver. So this is silver in the daily time frame. Currently consolidation. You can see this looks like, to my eye, that's bottoming action along the 50-day moving average. MACD remains in bull mode. Looks like we've got bottoming action. So again, I suspect that we are looking at a bottom in silver at about $30. And next move is to the upside. Weekly time frame, same kind of thing. Bottoming action along the 10-week moving average. Now see, if you had been present in my previous version of this video, which didn't have the microphone turned on, you'd have had several minutes of me pointing out how when we see a doji candlestick on the price chart, that is indicative of a high level of energy being expended. And of course, it doesn't look that way at first glance. We look at a doji candlestick and we see it's like, okay, it's one thin vertical bar or one thin horizontal bar. Yeah, okay, who cares? Well, take another look at this price bar from the perspective of buyers and sellers. And so what we see from that perspective is that buyers were able to push price all the way up to the top of this price bar, and sellers were able to push price all the way to the bottom of that price bar. But they have so far met pretty much in the middle. Neither side is either, one, able to push price in a definitive direction, higher or lower, or two, willing to push price, because it requires a commitment. If the bulls want to push price higher, they have to commit to pushing price higher, and likewise on the bear side. Bears want to push price lower, they got to commit. And so whether it's an inability or an unwillingness, neither the bears nor the bulls are willing to push price in a certain direction from this level. And so we end up with a doji. But the key point, and the point that I want to make, is that a doji candlestick is always indicative of a high level of energy. Lot going on in the silver market. So let me keep going. My short videos never end up being short. And so I'm working on that. I promise you, I'm working on that. Weekly time, or no, monthly, excuse me, monthly time frame. two things I want to point out in this chart. One is from a MACD. So if we're looking at MACD as an indicator of overbought, oversold, what I see here is that we have a long way to go before silver becomes overbought based on MACD in the monthly time frame. So silver's got a lot of upside to gain, a lot of catching up to do. Silver's got a lot of upside to gain before it becomes overbought in the higher time frames, in my opinion, and of course, based on the charts. And then the second point in this chart is that there is very little overhead. Once we work through this $30 level, and you can see we're almost there, silver's almost consolidated, high level consolidation again, high level consolidation. And once silver works through that level and starts moving higher, there's very little overhead resistance before we get to this all-time high at 50. And so reasonable to expect that silver could and likely will move quite quickly from 30 up to this level, and then this level, and then up to the $50 level and challenge that all-time high. I've got some other content on silver that I'll be sharing with you, that the upside potential in silver is just phenomenal. If you don't buy, if you aren't currently invested in physical silver, would you just bite the bullet? Would you just go do it? Go buy some physical silver and be done with it. You'll thank me later. But again, not financial advice. I'm not an investment advisor. I put that hat away. So can't give you financial advice. This is for educational purposes only. If we look at silver in the quarterly time frame, cup and handle pattern, clearly a break higher, impulsive break higher. Look at that price bar. That's what we're currently working on. That's the current quarter. Silver's headed higher. So, buy it now, buy it later. Silver's headed higher. If you want to be invested in silver, don't hesitate. That would be my suggestion. Let's see, silver, this is 6 months. So every price bar represents 6 months in time. Again, $40, $50 price targets. As always, we have at least two headwinds in the precious metals, and that's the US dollar and interest rates. US dollar, pull back, and then it appears that we're getting a consolidation and perhaps preparing for a move higher, MACD in bull mode with room to move to the upside. So certainly could see some strength in the US dollar, which may act as a headwind against the precious metals. This is yield on the 10-year note, daily time frame. I suspect, and this is just me, good old boy from Texas, throwing mud against the wall. I suspect that we have seen the highs in interest rates for 2024, given that given that it is an election year. I suspect that we won't have higher interest rates in 2024 unless we get some black swan, something out of left field happens. What we can see in this chart is that we had a definitive uptrend. That's this pink Andrews pitchfork, and then the trend changed, and that's this red Andrews pitchfork, downtrending Andrews pitchfork, and that's clearly the current trend in this daily time frame, and that is towards lower interest rates. The decisive action in this chart, and it's what lets me adds some credence or gives me some more confidence in suggesting that interest rate, we've seen the high for 2024. And that's the fact that we got this gap back in late 2023, when interest rates started moving lower, they did so decisively. We got this significant gap, non-trivial gap lower, and then interest rates continued lower for several months. And of course, if you remember back to the narrative at that time frame, it was the Fed's going to cut interest rates 6 times in 2024, starting as early, I think it was March at the time. And of course, this was November, December of 2023. And so anyway, that was the downward movement here in interest rates. It was all based on narrative. Fundamental investors. If you went back to my videos of this time frame, I was suggesting that interest rates were not going lower. In the big picture, interest rates are only heading higher. But anyway, that the talking heads were all talking about 6 moves lower, and so we got this retracement in interest rates. Here we start to get some acknowledgement that, oh, well, maybe the Fed's not going to lower interest rates 6 times. I think in here they were saying, okay, it's only going to be 3 cuts in 2024, and rates started creeping back up. And of course, now we're at the point where it's they're talking at best, we're going to get 2 cuts. More likely we'll only get a single cut. I am still of the opinion, personally, if you asked me for my opinion, Fed's not going to cut interest rates. The only way the Fed is cutting interest rates is if they also implement a quantitative easing program to finance lower interest rates. And of course, some people think that that's exactly what's going on right now, is that the Fed and the Treasury are trying to engineer conditions such that they can go back to the 0 interest rate environment and have a cover story for doing so, which of course, it just means they fire a printing press and, 24/7 they're printing money. Well, money. I got to air quote money because all it is printing press money. Mining stocks, let's be done with this video. I've rambled on for long enough. We'll talk about the stocks in another video. Lots to share. Haven't talked to you guys in a long time. I'm always thinking about you, so don't think that I don't care just because I'm not doing videos. So talk to you soon, folks. Let me stop my video. Let's see. Oh, also new updates. I think I had the artwork up. So artwork on the walls, that makes it feel much nicer. And then just this week, I got some house plants. And so you can see over both shoulders, it's reversed. So anyway, over either shoulder, you can see that I've got house plants. And I'm going to stop rambling. I promise. See you, folks. Have a fantastic day.